So today we had an absolute jam-packed day. I can't even believe we did everything we did. We met a couple of investors at the property today. We went and got breakfast. Adam and I played a round of golf at River Ridge. Then we shot back and we met about 20 investors at the property, or potential investors, to just walk them through what we're doing, tell the story, check out the location, and now we are gonna go over and have beer and pizza at Toppers. I don't know, I would rate today like a 10. Like, I can't believe we pulled all that off. This is why we're so excited about Ventura, because as real estate, as you've all heard, location is everything. And when you look at this street, this now looks like your typical coastal community, right? This now represents what Santa Barbara all the way to Carlsbad, and that's what this kind of looks like. One street over doesn't look anything like that. So Ventura for us has always been known as kind of the hidden gem on the Southern California coast. All of that changed about 4 years ago. We believe that we're on kind of the cusp of what's going to become basically more of this. More demand, more youth, more larger, a larger economy, and more of an affluent market.
And so the city basically committed about 5,300 units. But when you look at what's actually in the pipeline, because a lot of these projects, like ours, we started this one in 2019. So we have the ability to see what's in the pipeline, what's coming up over the next few years. There's almost nothing over the course of the next 8 quarters in the queue. That's driven by 2 main factors. One is a lot of builders left because it was so hard to build here, which is why there's so much happening in the Sunbelt states. And 2, the interest rate environment that we're in makes it very hard for people to make projects work. And so we're coming into a location that's very undersupplied, that's, you know, just exacerbated even more because of the circumstance, and we have the ability to bring on product to the market. In our other buildings, so this one is one of 3 that we have in Ventura. In our other 2 buildings, because the issue is so severe with the unit gap, we're actually able to take a project that was already approved and get even more units approved on it beyond what was originally scheduled. Because they don't have new development happening, they're taking the existing developments, the few that they do have, and they're giving us more units as a result of it.
Yeah, and then in contrast, it's a smaller building, but everybody saw the apartment next door to our lot. That was the newest apartment that went online. It's about 55 units. They leased up to 100% occupancy in under 3 months. Just record-breaking time. They built the right units, studios 1s and 2s. So it's really important that you're paying attention to what the market wants. The city council is already there.
Mikey, what's the financing like over at Front Street?
Okay, so, well, there's a way that we're doing it, and then as you know, as being a builder, there's a way that maybe is more conventional. More conventional is you take out a construction loan that's typically 3 years. You might have a 1-year extension, or maybe even another one on top of that. Yeah. And so the idea is you take out your construction loan, you build it, you're adding new value, and then you refinance out, right? For us, we're kind of like a risk-off company. So our kind of outlook is maximize upside and limit downside. And because of interest rates right now and just some uncertainty, we actually are doing a mini perm loan. Basically what it means, you have your construction loan and then it can roll right over to permanent financing. So it can move into a 10-year loan. Yeah. But to get it, it's a big down payment. So we're putting basically about 40% down. So it's about a 60% loan to cost.
Got it.
And the idea is, like, dude, if we build this thing and interest rates come down, which I think they're going to, well, we refi.
Anytime.
We'll refi once it's stabilized, right? Because you wanna, when you're refinancing, you want a good value to refi so that you don't have to put additional capital in. You wanna take capital out.
So once you get tenants in place, then you're gonna refi.
Yeah, so basically, like, if you're looking at our actual numbers, it's about 42 million to build, right? So we'll put about 17 million down. And then when we finish it, we're looking at about a $64 million value. And then when we refi, stabilized, we're looking at about an $80 million value. So because we brought value up so much, not only can we refi, we can bring a lot of money back to investors. So we're targeting about 80% back to investors.
Let me ask you one other question. What is Commune? What's the percentage they take of the deal?
Good question.
There's a management fee too, right?
Yeah, so how we structure it on this deal, all of them seem to be different depending on really the amount of return you can capture. On this one, we take a 2% management fee, and that basically allows us to keep the lights on and have the people in place to make sure we operate this investment well. And then as far as what we take from the profits, so let's say you invest $250. You're getting everything back until you hit $250. And then once you're paid back, then we come in and we get to take 25% of the profits.
Got it.
So you as the investor will take 75%, we'll take 25%. Have I spoken to everybody, or did Michael talk to everybody about the option that we're targeting to do at year 5? There's a very slim chance I sell this thing in 5 years. I want to hold this thing for a long time, knowing that I think this market is going to become every other coastal community, right? If I could have bought, a property 300 yards in Carlsbad from the water 30 years ago, I still want that today. But that's not all investors. So what we're going to do at year 5, our company is going to look at taking our refi proceeds and buying investors out that would like liquidity at market value. There'll be no discount.
There are very few investors that ever want to liquidate when we do that event, because the way that this project's laid out, we're 2 years of construction. By year 3, when we start leasing up the property, that's when dividends would begin. And if you've seen the deck, you'll have the dividend schedule there. By year 4, we're projecting to do a refinance. So even though we locked in a 10-year loan, we still assume that we're going to be able to do a refi once we stabilize the property. And that brings back almost 85% of the principal investment back into your pockets. And because it's a refinance, that's non-taxable income to you as the investor, because there's no gain that takes place at that moment in time. And so what ends up happening with a lot of investors, they'll ask the time frame to get out, and then the refinance event takes place. They get so much money back, non-taxable. Well, they got most of their investment in. Now they're invested basically with house money. They went and did something else with that money, and now they're just getting, cash flow every quarter coming from rents on this property. And so why sell at that point is what a lot of them go through, which is why whenever we do these tender offers, we don't have many people that want to sell, because at that point they're just causing, a taxable event for themselves.
Yeah, and then the second part is this property has a really good depreciation schedule. Oh, yeah. So, you get a big lump sum of loss in the first 7 years. It's not loss we're actually paying. We're just able to depreciate the building. And so if you exit early from a tax incentive standpoint, you do miss out on some of that. Pizza and beers?
Let's go. We're
All
gonna
right.
miss that sunset.
Let's do it. So if you like what you saw today, maybe not the golf, but the property, the area, what I think the greatest opportunity is, and you want to hear more about it and see if maybe this is a good fit for you to come invest with us, there's going to be a link below that you can use. Put your information in. Someone from my team will reach out. But now, as I'm saying that, if you want to come play a round of golf with me, talk business, and have you on pin high, DM me. Send me a message. Let's line that up. Let's see if you can beat me.